Hello traders, have you ever entered a trade only to watch price pull back against you before continuing in the same direction? That's because you entered too late. Okay, that's because you entered too late. Now, instead of chasing the market, you need to wait for the perfect pullback. Right? Very important. Now, in this video, I'm going to be breaking down exactly how to trade pullbacks in a trending market. All right, how to trade pullbacks in a trending market, step by step. So you're going to learn where to enter, how to confirm your setups, and how to avoid fake pullbacks that trap traders. So make sure to watch until the end, because this strategy can completely change the way you trade. Now, before we get into strategy, let's define what a pullback actually is. A pullback is a temporary retracement in price within a larger trend. Now, we have a bearish trend here, right? A pullback is just a temporary retracement before the bearish move continues. Okay? So in an uptrend, now this is an uptrend, right? This is an uptrend. In an uptrend, price moves higher, pulls back slightly. You can see this is just a pullback. It's just a pullback, right? It's just a pullback. So in an uptrend, price moves higher, pulls back slightly, and then continues upward. In a downtrend, price moves lower, retraces upward, and then continues downward. So some key characteristics of a pullback are that it happens within a strong trend. Price is making higher highs and higher lows, that's for an uptrend, or making lower highs and lower lows, that is for a downtrend. And another characteristic is that it's temporary, okay? Pullback is temporary. It is not a trend reversal, it's just a short retracement. And then it usually stops at key technical levels. Pullbacks usually stop around support or resistance, or moving averages or Fibonacci retracement levels, okay? Important technical levels. Now, many traders mistake pullbacks for reversals and panic when price moves against them. But pullbacks create the best entry opportunities if you know how to trade them correctly. Now that we know what a pullback is, let's just talk about where to enter trades. Okay? Now, for the best pullback entry zones, we have support and resistance zones. Very important. If price pulls back to a previous support in an uptrend, or pulls back to a previous resistance in a downtrend, it's a great place to look for entries. All right. Another great pullback zone is your moving average. Okay. You can add the 50 moving averages, the 50 EMA and the 200 EMA, for example, to your charts. So the 50 EMA and 200 EMA often act as dynamic support and resistance. If price respects these levels, it signals a strong trend continuation. All right. Then finally, you can also, I'm just going to remove these lines to give us a clear view. Right. Also, pay attention to Fibonacci retracement levels. All right. You can use Fibonacci retracement levels to also, predict possible pullback zones. Okay. And then finally, make use of your trend lines. All right. When a trend is strong, price tends to pull back to a rising or falling trend line, as you can see. When a trend is strong, okay, price tends to pull back to a rising or a falling trend line before continuing. Now, instead of entering randomly, wait for price to reach these levels and look for confirmation. Blindly entering trades at support or Fibonacci levels is not enough. You need confirmation. Okay? So how do you confirm a pullback entry? You can use price action signals. For example, look for pin bars, something like this, something like this, something like this, right? You can look for pin bars, you can look for engulfing patterns like what we have here. You can look for rejection wicks at key levels. And then volume confirmation is another, another way to confirm your pullback entry. A pullback with low volume followed by high volume, breaks out from a pullback with a low volume followed by a high volume breakout, signals trend continuation. Okay, so for example, we can see that we had a pullback around here. You can see that this volume was low around here, and you can see that continuation. You can see there was an increase in volume. Then another way to confirm a pullback entry is the break of minor structure. In an uptrend, if price starts making higher lows again after the pullback, that's a strong entry signal. Okay, so once confirmation appears, you can enter the trade with confidence. Now let's talk about how to enter and exit pullback trades properly. For your entry strategy in an uptrend, you buy when the price retraces you buy when the price pulls back to a support or moving averages or Fibonacci retracement zones. Then in a downtrend, you sell when the price retraces to resistance or key levels. Always wait for price action confirmation before pulling the trigger. Okay, it is very important. Then for your exit strategy, you can target previous swing high or low. You can take your profit at the next resistance in an uptrend or the next support in a downtrend. And it is important to use trailing stop losses as well. Lock in profits as price moves in your favor. So if price is moving in your favor, for example, you are in a sell trend and the price is moving in your favor, always be adjusting your stop loss. If your stop loss was initially above here, let's say you enter the sell here, and the price moves to this point and creates a new high, you can adjust your stop loss to be above the new high. And when it creates a new lower high, you can adjust it again and so on. Then in case of a buy trend, if you enter a buy, and let's say your initial stop loss was around here, and the price creates a higher low, you can adjust your stop loss to below the new higher low, and so on and so forth. Okay, and then finally, another exit strategy is to exit early if price fails to continue trending. If the trend weakens, it's better to get out before a full reversal happens. Okay, so even with the right strategy, traders often make mistakes. So here are some common errors to avoid when trading pullbacks. The first is entering too early. Let price reach a key level before jumping in. Secondly, ignoring confirmation. Always wait for price action signals before placing a trade. All right. And another mistake is setting your stop losses too tight. Give your trade enough breathing room by placing stop losses beyond key levels. Do not place it immediately under your swing low or immediately above your swing high. Give some breathing space. Okay. Finally, do not trade against the trend, the main trend. If the overall trend is weakening, a pullback might turn into a full reversal. So do not try to trade against the main trend. Okay? By avoiding these mistakes, you will trade pullbacks with more precision and confidence. Now, let's just do a very quick recap of the most important points. Okay? First, pullbacks are temporary retracements in a trending market. Secondly, the best entry zones are support and resistance zones, moving averages, Fibonacci levels, and trend lines. Thirdly, always wait for confirmation before entering your trades. Use price action and volume signals. Okay? Fourthly, set smart stop losses and take profits to maximize your trade setups. Do not use very tight stop losses. So give some breathing space. Okay? And then finally, avoid common mistakes like entering too early or ignoring the strength of the trend. If you master pullback trading, you'll be able to enter trades at better prices, manage risk effectively, and avoid chasing price movements. If you got value from this video, make sure to smash that like button and subscribe for more powerful trading strategies. Also, drop a comment below. Do you prefer trading pullbacks or breakouts? Let's talk trading in the comments. In the meantime, thank you for watching, and I look forward to seeing you in the next video. Happy trading.